joining me. My name is Ross McCleary and I'll be taking you through the PSG Wealth Local Solutions feedback for the month of July. I'll start with a market update. On this slide, we can see asset class performances over various timeframes from 1 month all the way out to 7 years and all in Rand. As we all remember, the first quarter of the year was one of the worst in recent memory. The second quarter saw markets around the world rebound strongly. July was another strong month, both global and local equities up strongly, between 2.5% and 6.5%. SA property continued to struggle and was the worst performer, down 3.2% for the month, and remains the bottom performer across almost all time periods from 1 year out to 7 years. Looking at the time frame from 1 year to 7 years, we can see a few trends. First off is that South African equity, and in particular the financial sector, have been the perennial laggards, along with property as mentioned before. SA bonds, on the other hand, have fared far better on a relative basis. Contrary to this is that global assets, and in particular developed market equities and emerging market bonds, have been the best performing asset classes in rands over the last 3, 5 and 7 years. These offshore assets have been aided by the rand appreciation. Moving on to our fund feedback. I will start with a summary of the current asset allocation of our 5 solutions. The Creator Fund, the Equity Fund, currently has 92% in equities, with 76% in South Africa and 16% offshore and 8% in property and cash. The Moderate Fund, our high equity balance portfolio, has 72% in growth assets, 44% of these in South Africa and 28% offshore. The remaining 28% are in bonds and cash. The Preserver, our low equity balance fund, has 37% in growth assets, with 21% in local currency and 16% denominated offshore. It has 63% in bonds and cash. Our Income Solution has 95% in bonds and cash, with 10% of this being denominated offshore, and a small residual of 5% in other assets such as local equity, property and preference shares. Our Enhanced Interest Fund is obviously 100% in money market and cash instruments. This slide shows a summary of our solutions rankings versus peers over various timeframes. The key focus here is that over the long term, 7 years and longer to fund's inception, the funds are all top 2 quartile performers. Over the minimum recommended investment periods, highlighted in black rings, we can see that disappointingly the Income and Preserver have fallen just outside their top 2 quartile performance targets. The Enhanced Interest Fund, Moderate and Creator are still strong top half performers. Moving on to the monthly highlights for July. Strong to note that the AUM of all of our solutions is still strong and currently just over 51 billion. Looking at our outperforming funds in totality, we can see that 15 of our 28 underlying funds beat their respective sector averages. This equates to 54%. Although lower than we would like, it is still above 50, which is desirable. Looking at the highlights per fund, we can see the Enhanced Interest Fund. Its top performer was the PSG Asset Management Segregated Mandate. Looking at the Income Fund, you can see that its top performer was PSG Diversified Income. This fund ranked second out of 102 funds. PSG Wealth Preserver Fund of Fund, their top performer was the Coronation Balanced Defensive, which ranked 51st of 159 funds. Looking at the Moderate Fund of Fund, we can see that the Ned Group Investments Core Diversified was its top performer, ranking second of 203 funds. Finally, our PSG Wealth Creator Fund of Fund, its best performer was the Fairtrade Equity Fund, which ranked first of 167 funds. Moving on to the individual fund performances for the month of July, starting with the Enhanced Interest Fund. As we can see, the fund performed in line with the sector for the month, returning 41 basis points. If we look to its minimum investment period of 1 year, you can see that it has comfortably beaten the sector, producing 7.1% or 6.7%. You can also see since inception it has comfortably beaten the sector, providing an average excess return of 40 basis points per annum. In the second table, we can also see it is consistently ranked in the top quartile across all time periods. The fund currently has an effective yield of 4.95%. Moving on to the PSG Wealth Income Fund of Fund. The fund had a strong month in July, returning 0.67% versus the sector average of 0.48%. Looking to its 2-year performance, which is its minimum recommended investment period, we can see the fund has struggled, however, returning 6.44% versus sector average of 6.84%. If we look out to the fund's inception period, we can see that the fund has comfortably beat its sector average, returning 7.96% versus sector average of 7.25%. Although going through a bit of a tough time, we can note that the fund has a strong track record of beating its sector average, outperforming the sector 85% of the time on a rolling 2-year basis, and is currently ranked 12 out of 42 funds in the sector over the last 7 years. Moving on to the PSG Wealth Preserver Fund of Fund. The fund unfortunately had a tough month and returned 89 basis points versus the sector average of 1.1%. If we move further out to the fund's 3-year record, which is its minimum investment period, we can see the fund has also struggled, returning 4.19% versus sector average of 4.88%. However, like with the income fund, we can see from its inception, the fund has a strong record, returning 8.82% versus sector average of 7.9%. And also has a strong, consistent record of beating the sector, doing so 90% of the time on a rolling 3-year basis, and is currently ranked 28th of 70 funds in the peer group over the last 7 years. Moving on to the PSG Wealth Moderate Fund of Fund. That too had a tough July, although still returning positive, returning 1.56% versus sector average of 2.21%. Moving out to the fund's minimum investment period of 5 years, the fund continues to perform well, returning 4.18% versus sector of 3.75%. And the fund continues to give us strong excess returns since its inception, returning 10.05% per annum versus a sector of 8.49% per annum. Encouraging to note that the fund has beaten the sector average 100% of the time on a rolling 5-year basis, and is ranked 28th out of 84 funds in the peer group over the last 7 years. Moving on to our final fund, the PSG Wealth Creator Fund of Fund. The fund had a very strong July, returning 4.03% versus the sector average of 2.72%. As with the moderate fund, it has also returned strong performance over its minimum investment period of 5 years, returning 2.79% versus sector of 0.86%. Likewise, since inception, it has returned 10.81% per annum versus a sector of 8.91% per annum. It has also shown a strong track record of consistently beating the sector, doing so 99% of the time on a rolling 5-year basis, and is currently ranked 20th of the 84 funds in the sector over the last 7 years. Thank you.